Welcome back to the channel, ladies and gentlemen. In this video, we're going to talk about reasons why having business credit is a must. This is a very important video because a lot of you guys don't understand how important business credit is and actually how easy it is to get business credit. It's actually easier to get business credit than it is to get personal credit. And guess what? You get more money, bigger loans, and bigger lines of credit with business credit than you do personal credit. You can get 10 to 100 times more money with business credit than you would with personal credit. This is so important. This is so powerful. I want you to share this video with someone who needs this information because we're going to be talking more and more about business credit on this channel. So if you are not subscribed, make sure that you are subscribed to this channel and hit the bell icon for all notifications to receive notifications on when I release new videos. Okay, so business credit is credit in a business name that is linked to the business or the business's EIN number. It's not going to be linked to your social security number. This is credit that the business owner can obtain. Again, that is not linked to your social security number if you do this right. So here's a way to do it where you do not have to even put your social security number on the application. They're going to ask you for it, but you don't have to put it on there. And there would not be any personal credit check to obtain this kind of EIN credit. So we're going to be talking about this in depth in this video and more on this channel. So when you're applying for consumer credit for something such as an auto loan, the lending institution pulls your personal credit using your name, address, and social security number. This information is sent to the consumer credit reporting agencies, and they supply the lender a credit report with all of the information they have relating to someone with a similar name, address, and social security number. With this type of credit, an inquiry is then put on your consumer credit report, which everybody knows this, and your report is used to make the lending decision. Plus, the credit you obtain will then be reported to the consumer reporting agencies. So when you apply for something such as a business loan, the lending institution pulls your business credit using your name, address, and EIN number, or more like the business names or the business name and address, and then the EIN number. This information is sent to the business credit reporting agency. So business credit and personal credit kind of works in the same way, but to me it is a little easier to do business credit or to get business credit, and it's more beneficial. So applying for consumer credit versus business credit, it's important to note that when applying for financing and credit using your business credit, you should not supply your social security number on the application, even though it will be requested. When you do this, no personal credit check can be pulled because the lender cannot pull your credit without your social security number. This forces them to only use your EIN credits, which has to be built, of course. And we're going to talk a little bit about that, how you can start building up your business credit without even worrying about your social security number or even worrying about your personal credit. None of your personal information is going to be linked to your business lines of credit. And that's really the way it should be done so that you're not responsible for anything if something happens. So this means you will be approved only on the merits of your business credit report. So what benefits does having business credit truly provide? Business credit has no direct affiliation to personal credit. Like we said before, business credit has no impact on the business owner's personal credit. When done properly, business credit is obtained without the social security number or SSN being applied on the application. This means there is no credit check from the business owner's credit to actually get approved. This also means that anyone who has bad or even horrible personal credit can still get approved for business credit. I bet you a lot of you guys didn't know that. You can get business credit even if you have horrible personal credit because you're not even going to use your personal credit. So business credit reports to the business credit reporting agencies, not the consumer reporting agencies. So there are business reporting agencies like Experian has a business reporting agency or business reporting side. So does Equifax. And then there's Dun & Bradstreet. And then there's a few others that are not major, but those are the three major business credit reporting agencies, to my knowledge. So as business credit is used, it has no adverse impact on the owner's consumer credit because it's not reported to the consumer agencies. This means utilizing the account over 30% won't have any adverse impact on the personal credit scores, because with business credit, when you actually use that line of credit, if you use more than 30%, it doesn't affect your score. Like with personal credit, if you use over 30% of a line of credit, or you have over 30% utilization rate on your credit, that affects your score. That's not how it works with business credit. So that's another reason why business credit is better than personal credit. And that's not to say that you don't need personal credit or that you need to ignore personal credit, because you do. You want to have good personal credit and good business credit. But while you're working on your personal credit, you can have business credit. And then there's no inquiries on your personal credit when you apply for business credit. So that's pretty obvious. So 10% of your total consumer credit score is based off of inquiries. So if you are using your personal credit to apply for business loans and credit, your scores will go down as a result of those inquiries. Plus, those inquiries can remain on your credit for an extended period of time, affecting your ability to borrow more money. That's why it's so important to have business credit. Some unsecured business lending sources won't even lend you money if you have 2 inquiries or more on your personal credit within the last 6 months. So 30% of your total consumer credit score is based off of utilization, like we talked about. So if you use your personal credit to get credit cards for your business, and if you use those cards, you will lower your scores because you're most likely going to use more than 30%. So if your limit is $1,000, having a balance above $300 lowers your score. This means 40% of your total score is damaged just by applying and using the credit card, because 10% for the inquiry and then 40% or 30% for the actual utilization. This is just an example. That's a total of 40%. With true business credit, 0% of your score will be affected. So here's the great thing about business credit. Your business credit score is only based off of the ability to pay your bills on time, your business bills. So if you're paying your business credit line bills or your loans on time, you're going to have a good business credit score. It's simple. So as a result of that, you can obtain credit much faster when you're using business credit versus personal credit. Okay, so let me go back. Personal credit scores are based off of 5 factors. Payment history is the most important. Then it's utilization. Then it's length of credit history. And then you have accumulation of new credit. That's 10%. And then credit mix is 10% as well. So the most important things are the payment history and the credit utilization. And that really affects your personal credit score. So business credit scoring. Consumer credit scores are made up of 5 factors and take years of well-disciplined borrowing to get really good scores. Business credit scores are mostly based off of payment history. So as long as you pay your bills as agreed, you will have an excellent score. And it only takes 2 to 3 reported accounts for your score to be established. And most vendors have your accounts reported to the business reporting agencies within 30 to 90 days, which is very, very quickly. You can have a business credit score way faster than building personal credit. This means you can build a business credit profile and have an excellent credit score in a very short period of time. With consumer credit, so with personal credit, of course, someone has to have your permission to run your credit. Only certain institutions such as banks, auto lenders, mortgage brokers, and other licensed to lend money and approve for credit pulling capabilities can pull your consumer credit report. But with business credit, this information is made public, which means anybody who wants your business information can basically get it for cheap. So this is so important. Like I've said before earlier in this video, when you put your social security number on your credit applications, you are almost always providing a personal guarantee. This means you are personally liable for your business debts. So if you were to default on one of these obligations, the creditor will pursue you, or they'll go to your business assets first, and then they're going to personally come after you, including your home, your car, your stocks and bonds, your bank accounts, and any other assets. So you don't want that to happen. That's why business credit is so important, because a business entity is like its own person. The business itself would be liable and not you. So business owners don't expect to fail, but unfortunately 90% do fail. It makes no sense to put you and your family's financial future in jeopardy when you know that going into business, basically you have a 90% possibility of failing. That's kind of hard to say. You don't want to fail. You don't want to think about failing, but most businesses actually do fail. So again, it's very important that you have business credit. Remember, many times the reasons a business might fail have really nothing to do with you or things you can control. A lot of times it has to do with the economy and unexpected pandemics like the one we have been going through for the past year or over a year. But if you have an online business, there's a higher chance actually that you can keep the business no matter what the economy looks like, because my business has really gone up since last year. It's actually tripled during the pandemic, which is amazing. So don't risk it all. There's no question starting and running a business is risky. This is why most conventional banks make it so hard to get a loan. So don't use a personal guarantee unless you really have to. With many business loans, you will need to, but with credit, you don't need to as long as you build business credit first. The value of business credit when selling your business. So anyone who has sold or bought a business will tell you of the importance of business credit. Now that you know how easy extensive credit and financial information is to get for a company, if you were a buyer, wouldn't you get it? Would you want to buy this company from what you see on the business report? Is the company established? Do they pay their bills? Do they look like a successful company? If you could choose from two companies to buy that were the same in every way except for business credit, which one would you buy? The one with a very limited or no credit profile, or one with a credit profile that reflects a good payment performance, and one with available credit? That's very powerful. Business credit is essential in getting a good evaluation of a business. Business credit is used for lending decisions. So when a business owner applies for financing or credit, their business credit is reviewed. Not having business credit established will get an owner declined for financing, but there is no Fair Credit Reporting Act in the business world that requires those who review your credit to notify you on why they did or did not pretty much approve you. So they don't have to tell you the factors that factored in their lending decision. Even though it is always reviewed, most business owners have no idea that it is. So you'll have more borrowing ability. Plus, per the SBA, business credit limits are 10 to 100 times that of consumer limits. Obtaining business credit radically increases your available credit. As a result, an average Staples card limit on the consumer side is $3,000, but in the business world, it might be closer to $30,000. Businesses have a need for higher limits, a higher limit that they can or that they get with business credit. This is another reason it is very hard to scale a business using personal credit only. Business credit for startups. So Business credit is perfect for startups. Most conventional and private lenders won't lend to companies with financials or without financials and who have been in business for less than 2 years. Or even if they've been in business for more than 2 years and they still don't have any financials. The most popular cash flow type of financing requires 1 year in business and steady revenue. It's a typo. But most consumer credit card approvals are based upon personal income, but the business credit approvals, especially if it's a startup, you can get a ton of new credit without any of those items. Business credit is perfect for businesses who don't have or want to show financials. So you can get business credit with no financials. Let's face it, we write off all expenses in a business we can. This leaves a smaller net profit, which is what most lenders and investors look at. Business credit doesn't look at financials or bank statements. A business, even with no cash flow, can be approved for high limit cards, helping them grow their cash flow. Now, this is if you are a startup, they're not going to look at your financials or bank statements. So this is kind of like a typo, because if you have an established business that has been in business for a few years, then they are going to kind of look at your financials and bank statements. Sometimes it's going to depend on the type of lending, because there are several different types of lending options, types of loans, and all that kind of stuff. But for startups, there is startup capital that they don't look at business financials or bank statements if you have started to build up your business credit. It's just going to all depend on the lender and the type of funding. But you don't have to with some of these funding companies or lenders. And tax returns aren't looked at either. So even if the business shows a loss, they can still get approved. Most business lending requires collateral. This is because most businesses fail and the risk of repayment of lent money is very high. This is why most conventional lenders make it so hard to get money. They aren't set up for this type of risk. This is also why SBA requires all business assets and even personal assets to be used as collateral. Business credit is one of the only ways to get money without providing collateral to offset the risk. So the competitive advantage, 90% of the general population knows nothing about business credit, but now you do. You have a huge competitive advantage. It's much easier to grow a business with access to credit. You can test advertising easier and make some mistakes without risking it all. Big deal, because I made that mistake a few years ago when I was doing e-commerce and I used my personal money, and I ain't gonna go into all that, but I wish I had business credit back then. That's why I'm trying to stress this to you guys and girls, ladies and gentlemen. That is very important, because I made this mistake before. I was doing $50,000, $60,000 in a month in sales with my e-commerce website. And I had my payment processor lock up my funds. I had PayPal hold money for 180 days, and I couldn't process orders. So I lost the store because I did not have business credit. So again, you can do this without putting your personal finances in jeopardy. Business credit success in the real world. Every highly successful business in this country, the United States, has business credit. Most of these companies use their business credit to get as big as they are today. So take a look at how many Experian trade lines some of the top United States companies have now. They have hundreds. Walmart has like 500-600 trade lines. Contrary to what many believe, business credit is not only for big companies. Any company can build business credit. Big companies are typically the ones who enjoy the benefits of business credit the most, because they have CFOs who know how to obtain and use business credit, where most small businesses don't. But you can absolutely get your hands on some business credit. You can get your hands on the exact same credit these larger companies have if you know the formula to obtain it. And there is a formula, and we teach you that formula. So there is a link in the description to a webinar where I show you where people have gotten hundreds of thousands of dollars in business credit from different companies. They've gotten American Express cards, Chase Bank cards, Bank of America cards, trade line cards with like startup vendors, also cards with Staples, Walmart, Home Depot, Lowe's, and the list goes on. So check that webinar out. Is going to be the first link in the description. Is going to say free webinar on how to get $250,000 in business credit. Okay, so we're going to wrap this up really quickly, but the business credit building process outlined. So first, you want to get approved for vendor credit. A business credit report can be started much the same as a consumer report commonly is with small credit cards. The business can be approved for small credit cards to help them build an initial credit profile. These types of initial cards in the business world are commonly referred to as vendor credit. They have net 30 terms. This means they will give you credit on a net 30 term that's going to allow you to pay within 30 days. Some companies will require you to buy your products while others won't. Some companies will have you pay for your first couple of orders, others won't. Some companies report your credit very quickly and some don't. So not all vendor accounts actually report to all of the business credit reporting agencies. Some of them only report to one or two, and some of them don't report to any of them at all. So it's very important to know which ones actually report to at least 2 to 3 of those business reporting agencies. And again, I kind of talk about that in the webinar. So again, click the link in the description to sign up for the webinar. So that's pretty much it for this video. Thank you for watching. If you stayed to the end of this video, you're pretty much very serious about business credit. You're very serious about getting started, and that means you're headed in the right direction. Thank you for watching, and I'll see you in the next video.